and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News End channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Bitcoin faces breakdown below $90,000. Can altcoins like ETH, XRP, and BNB survive the market chaos? Strategy's massive Bitcoin bet. Is this the start of a corporate crypto takeover? Is Bitcoin headed for a $90,000 collapse? 5 alarming market signals this week. Nasdaq seeks approval for Canary Bar ETF. Will the SEC give the green light? U.S. Bitcoin ETFs lose $1.14 billion in 2 weeks. Is this the start of a crypto crash? Bitcoin faces breakdown below $90,000. Can altcoins like ETH, XRP, and BNB survive the market chaos? Panic in crypto markets as Bitcoin battles key support levels. Bitcoin's price remains dangerously close to breaking below $90,000, with bears tightening their grip. A $1.14 billion outflow from spot Bitcoin ETFs in the past 2 weeks signals fading investor confidence, while rising trade tensions between the U.S. and China and a dovish stance from the Federal Reserve continue to weigh heavily on market sentiment. However, despite Bitcoin's lackluster performance, major players like Michael Saylor's strategy remain committed to their bullish outlook, with 20,356 BTC purchased for nearly $2 billion in an aggressive accumulation move. But will this be enough to prevent a catastrophic collapse? Bitcoin's price struggles. Will $90,000 hold? Bitcoin is currently trapped in a narrow range between $100,000 and $93,388, showing signs of growing weakness. If BTC loses the critical $93,388 support, a free fall to $90,000 could follow. Worse, a drop below this level would complete a bearish double top formation, historically a precursor to deep market corrections. On the flip side, bulls must push BTC above $100,000 to regain momentum, potentially targeting $102,500, $106,500, and even $109,588 as key resistance levels. Altcoins on the edge. Which cryptos are showing strength? Ethereum, ETH, faces make-or-break moment. Ethereum recently failed to reclaim $2,850, indicating weak buying pressure at higher levels. If ETH remains under its 20-day EMA of $2,765, a sharp decline to $2,600 and possibly $2,500 is likely. A break below $2,500 could accelerate losses toward $2,300. To regain momentum, bulls must push ETH above the downtrend line, which could trigger a rally toward $3,450 and $3,750, key resistance levels that would confirm a trend reversal. XRP nears breakdown. Can bulls defend $2.36? XRP has dropped below its 20-day EMA at $2.61, approaching the symmetrical triangle support line. If the bulls fail to hold this level, XRP risks plummeting to $1.77 in a steep sell-off. Conversely, a break and close above the moving averages could keep XRP within the triangle pattern, delaying a larger downside move. BNB battles critical support at $635. BNB remains locked between $635 support and the 50-day SMA at $664. A break below $635 could trigger a cascade to $596, reopening the massive $460 to $745 trading range. For a bullish comeback, BNB must break and hold above $664, keeping the current consolidation intact. Solana, SOL, in freefall, bears in full control. SOL failed to reclaim the crucial $175 breakdown level, confirming bearish dominance. If SOL remains below $155, expect a steep drop to $133. For any recovery, SOL must quickly surge past $175, potentially aiming for $206 if momentum shifts. Dogecoin, Doge, teeters on support. Breakdown incoming? Doge is testing the descending channel support, but faces heavy selling pressure at the 20-day EMA, 26 cents. If Doge fails to rebound, a collapse to 15 cents is on the table. On the other hand, a break above 30 cents could invalidate the bearish scenario and kickstart a stronger recovery. Cardano, ADA, under bearish control. ADA has failed to break above its 20-day EMA, 78 cents, suggesting continued bearish pressure. If the price stays below 73 cents, ADA could revisit the channel support line, with the worst-case scenario pointing to a 50 cents drop. A break and close above 78 cents, however, could pave the way for a rally to 88 cents and beyond. Chainlink, Link, downtrend resumes. Next stop $13? Link's price broke below $17.28 support, confirming a continuation of its downtrend. The next major support lies at the descending channel line, but if this breaks, Link could tumble toward $13. For a bullish reversal, Link needs a clean break above $18.72, signaling a reduction in selling pressure. Bitcoin's next move. Will BTC collapse below $90,000 or stage a historic comeback? Strategy's massive Bitcoin bet. Is this the start of a corporate crypto takeover? Strategy acquires 20,356 BTC for $1.99 billion, nearing 500,000 Bitcoin holdings. In a move that has sent shockwaves through the cryptocurrency market, Michael Saylor's strategy has ramped up its Bitcoin acquisition, purchasing an additional 20,356 BTC for nearly $2 billion. This aggressive buy brings the company's total Bitcoin holdings dangerously close to 500,000 BTC, further solidifying its status as the world's largest corporate Bitcoin holder. A bold $2 billion Bitcoin investment. Michael Saylor, the outspoken Bitcoin advocate and co-founder of Strategy, formerly MicroStrategy, announced on February 24th that the company had acquired 20,356 BTC at an average price of $97,514 per coin. This brings its total stash to 499,096 BTC, purchased for a staggering $33.1 billion at an average cost of $66,357 per BTC. The acquisition was funded through a $2 billion senior convertible note offering, continuing Strategy's aggressive expansion plan. The firm's latest debt offering, featuring a 0% coupon rate, matures on March 1, 2030. Investors can convert each $1,000 block of notes into 2.3072 shares of Strategy's Class A common stock at $433.43 per share, an eyebrow-raising 35% premium over its current market value. Is Strategy's Bitcoin bet sustainable? While some view Strategy's massive Bitcoin accumulation as visionary, others warn that the company is overexposing itself to extreme market volatility. Despite reporting a $670 million net loss in Q4 2024, Strategy remains committed to its long-term Bitcoin acquisition strategy. The company's controversial 21-21 plan aims to raise $42 billion in capital over 3 years, split between equity and fixed-income securities, to buy more Bitcoin. So far, it has successfully secured $20 billion, largely through convertible notes and debt. Institutions betting big on Strategy's Bitcoin play. Institutional interest in Strategy is growing, with major financial players increasing their stakes. BlackRock, the world's largest asset manager, boosted its ownership in Strategy to 5% following the company's rebrand on February 5. Additionally, 12 U.S. states, including California, Texas, and Florida, have disclosed holdings of Strategy stock within their pension funds and treasuries. Collectively, these states have invested over $330 million into the company. Unrealized profits and market impact. Despite the risks, Strategy is sitting on an unrealized Bitcoin profit exceeding $14.8 billion. If Bitcoin's price continues to climb, Strategy's aggressive accumulation could prove to be a game-changing corporate strategy. However, a severe market downturn could expose the company to significant financial stress. As Strategy pushes toward the 500,000 BTC milestone, the crypto world is left questioning. Is this the future of corporate finance, or a high-stakes gamble that could end in disaster? Is Bitcoin headed for a $90,000 collapse? 5 alarming market signals this week. Bitcoin traders fear a major support retest as bears take control. Bitcoin is limping toward the end of February with growing concerns of a potential plunge to $90,000. With bearish pressure mounting and market liquidity stacking on both sides, investors fear that BTC could be on the verge of another sharp correction. Adding to the unease, the Federal Reserve's preferred inflation index is due this week, and stagflation concerns are rising. Meanwhile, gold is on the verge of another all-time high, and Bitcoin's implied volatility has sunk to historically low levels, signaling that a massive price move could be imminent. 1. Bitcoin price stagnation signals danger. Bitcoin has struggled to break out of its tight trading range, failing once again to reclaim the critical $100,000 level. As BTC dipped below $95,500 on February 23, traders are mapping out key support levels, with some eyeing a dangerous drop to $90,000. Crypto analyst CRY Pinuevo noted that liquidation levels are now equal on both the upside and downside, meaning that a sudden price move could trigger massive liquidations. Meanwhile, trader Roman issued a stark warning. So many failed attempts to move up with a major lack of strength. A $90,000 support touch is coming unless we break $98,400 with a close above. This uncertain market structure has left investors on edge, waiting for a decisive move. 2. Will U.S. inflation data trigger a market crash? This week, traders are bracing for personal consumption expenditures, PCE, index data, the Federal Reserve's most watched inflation gauge, which could determine the next big move for Bitcoin and risk assets. Stagflation fears are increasing, with the latest labor market data showing weakening job conditions while inflation remains stubbornly high. This dangerous combination could force the Fed to delay interest rate cuts, crushing investor optimism. According to Mosaic Asset, history shows that stagflation doesn't always mean a stock market collapse, but uncertainty is at an all-time high. Analysts predict that the PCE report on February 28th could trigger extreme volatility, especially if inflation continues to rise. 3. Gold hits record highs while Bitcoin stalls. As Bitcoin stagnates, gold is soaring to new all-time highs, reinforcing its role as the world's ultimate safe haven asset. The precious metal is rising alongside U.S. Treasury yields and the U.S. dollar, an unusual phenomenon that signals widespread investor anxiety. Analysts at the Kobayashi letter highlight that gold has outperformed nearly every major asset in 2024, doubling the S&P 500's year-to-date return. If history repeats itself, Bitcoin could follow gold's lead in the coming months. But will investors have the patience to wait? 4. Bitcoin volatility at record lows. A storm is brewing. Bitcoin's one-week realized volatility has collapsed to just 23.42%, nearing some of the lowest levels in its history, according to Glassnode. Similar volatility compressions in the past have always led to major price spikes, but the direction remains uncertain. Options market data suggests that Bitcoin could experience a massive breakout within the next 3 to 6 months. Will it be to the upside or a brutal crash? 5. On-chain data signals investor exodus. Bitcoin's network activity is slowing, and analysts warn that this trend resembles previous market cycle peaks. According to CryptoQuant, the number of active Bitcoin wallet addresses is shrinking, and spot Bitcoin ETFs are showing lower accumulation rates. This is a troubling sign, as similar UTXO declines were observed before Bitcoin crashed in 2017. With the crypto fear and greed index stuck at 49 out of 100, sentiment remains dangerously neutral, meaning that a single catalyst could determine Bitcoin's next major move. Is Bitcoin on the brink of a catastrophic drop or a historic breakout? Nasdaq seeks approval for Canary Bar ETF. Will the SEC give the green light? Crypto market on edge as Nasdaq files to list a Hedera Bar ETF. The race for cryptocurrency exchange-traded funds, ETFs, is heating up as Nasdaq officially files with the SEC to list an ETF designed to hold Hedera Network's native token, HBR. With regulatory barriers still in place, investors are wondering, will this ETF secure approval, or will the SEC shut it down like many before? Nasdaq pushes for Bar ETF amid wave of crypto filings. The filing marks yet another attempt by major exchanges and asset managers to bring altcoin ETFs to the market. Nasdaq's application follows Canary Capital's move in November to list the Canary Bar ETF, which would offer investors direct exposure to Hedera's Hashgraph distributed ledger. While Bitcoin and Ethereum ETFs were finally approved in 2024, the SEC has remained hesitant when it comes to altcoin-backed ETFs. Approval for the Bar ETF would signal a major shift in regulatory policy, potentially opening the floodgates for more alternative cryptocurrency investment products. The growing list of crypto ETF applications. Canary Capital, founded in 2017, is aggressively pushing for altcoin ETF approvals. Besides HBAR, the asset manager has applied to list ETFs for Solana, SOL, Litecoin, LTC, and XRP. Other issuers have submitted proposals for ETFs tied to Polkadot, DOT, Dogecoin, Doge, and even the official Trump token. Analysts believe that recent political shifts in the U.S. have increased the likelihood of altcoin ETF approvals. Under former President Joe Biden, the SEC pursued over 100 lawsuits against crypto firms, delaying ETF approvals for non-Bitcoin assets. However, since President Donald Trump's second term began, the SEC has already approved 2 crypto index ETFs, signaling a potential pro-crypto shift in regulation. On February 20th, Franklin Templeton launched an ETF holding both spot Bitcoin and Ethereum, making it the second crypto index ETF to hit the market after Hashdex's Nasdaq Crypto Index US ETF, NCIQ, debuted on February 14th. Are altcoin ETFs finally on the horizon? According to Bloomberg Intelligence, the odds of an XRP ETF gaining approval stand at 65%, while Solana and Litecoin ETFs are at 70% and 90%, respectively. No estimates have been given for BAR's ETF chances, leaving investors wondering whether Nasdaq's filing will break through regulatory resistance. Will the SEC approve the BAR ETF, or is crypto regulation still too restrictive? U.S. Bitcoin ETFs lose $1.14 billion in 2 weeks. Is this the start of a crypto crash? Massive ETF outflows spark panic as U.S.-China trade tensions shake investor confidence. The cryptocurrency market is facing a major shock as U.S. Bitcoin ETFs experience record-breaking outflows, shedding $1.14 billion in just 2 weeks. With trade tensions between the U.S. and China escalating and monetary policy uncertainty looming, institutional investors appear to be pulling back from Bitcoin. Bitcoin ETFs see largest withdrawals since launch. Spot Bitcoin exchange-traded funds, ETFs, in the U.S. have seen their largest ever outflows since launching on January 11, 2024. According to SoSoValue data, over $1.14 billion exited Bitcoin ETFs in the 2 weeks leading up to February 21st, surpassing the previous record of $1.12 billion in June 2024. These massive outflows signal a potential shift in investor sentiment, particularly among the world's largest asset management firms. According to Marcin Kazmierczak, co-founder of Redstone, Bitcoin ETF flows provide a crucial indicator of institutional confidence in the crypto market. However, Kazmierczak warns that focusing on short-term outflows can be misleading. We're looking at a monthly time frame, which doesn't provide the full picture. ETFs are generally considered long-term investment vehicles, so analyzing flows over a 6-month or yearly period gives a more meaningful perspective. Despite the sell-off, he notes that long-term ETF flows remain overwhelmingly positive. But will that change as geopolitical tensions rise? U.S.-China trade war threatens crypto market stability. The sharp increase in Bitcoin ETF outflows has been linked to rising tensions between the U.S. and China after the announcement of new import tariffs. Investors are now anxiously awaiting the results of President Donald Trump's planned meeting with Chinese President Xi Jinping. While Trump has hinted at a potential new trade deal, no timeline has been set, leaving global markets in a state of uncertainty. Monetary policy and interest rates add to the chaos. While trade disputes have been a major contributor to the ETF sell-off, analysts warn that monetary policy shifts are also weighing on Bitcoin investors. Kazmierczak notes that multiple factors are influencing ETF activity. There are many moving pieces, including interest rate expectations, regulatory developments, and overall market sentiment that play a role. Despite these short-term outflows, institutional players are still holding strong. Entities like the Abu Dhabi Sovereign Wealth Fund and Wisconsin's Pension Fund continue to maintain sizable Bitcoin ETF positions, showing confidence in Bitcoin's long-term outlook. Will Bitcoin ETFs continue bleeding capital, or is a rebound coming?